Hello, 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 everyone. Happy Wednesday. Already getting halfway through the week. How's everyone doing? Good morning, Patrick. Good morning, Alan. Thank you for becoming a regular. Good morning, Tony. Good morning, PMG. Good morning, Christoph. Well, short term, we have some shorter term bullish patterns triggered. Lots of doubles triggering. Yep. Thanks for putting those in there. Good morning, Anissa. So, hope everyone is doing well. We had some numbers come out, the ADP employment numbers, and a little lower than expected. Now, the GDP numbers dropping from previous, or actually rising a bit from the previous, but dropping from forecast to back to 2.1. The core PC coming in better than expected, and these are based off the quarterly numbers. Not the Remember, we have PCE numbers tomorrow that are more important because they're more recent, but this is based off the trailing Q2 numbers based off GDP. PCE prices, the headline number coming in a bit better. Real consumer spending for second quarter coming in a bit higher than expected. So that's where that sits. Not a lot of little mixed results right there. What do we have though coming up for the rest of today? We have the pending home sales at 9. We have the EIA numbers in crude. And tomorrow you have to remember, these are the really important PCE. These are the month over month PCE numbers. And of course, you always have the year over year, but these numbers are going to be key tomorrow morning, as well as the unemployment numbers and personal income and personal spending. So those sort of trump the backwards looking GDP numbers, which are still, we have to get this was the second estimate. We get the final revision next month. So far this morning, a little financial strength in here, especially from Visa and MasterCard, mixed with your mega caps and stronger in energy. Let's just refresh this real quick. See, energy, comm services, financial are leading it. Fed Watch Tool, remember we were bumping up yesterday, but after the numbers came out with the big misses in the JOLTS numbers, it dialed back any future hikes. And now we're just fully in pause mode again with a cut in May. Those JOLTS numbers came in, and even the consumer sentiment yesterday came in a lower than expected. Fear and greed still in neutral mode. All right. So, in terms of earnings, we had HP yesterday, a little gap down in that. This morning, there's really nothing. After the close today, we got Salesforce is probably the biggest, and CrowdStrike, Chewy, but nothing's really going to be market moving. And tomorrow, before the open, we have Dollar General and Campbell's but they're not going to move the markets. But those are the ones I'm going to be glancing at, especially for inflation aspects. And then after close tomorrow, we have Broadcom and Lululemon, and really nothing on Friday. All right. So yesterday, if you didn't spot it, momentum bars. That's a way to play. If it could trigger the double, play momentum bars. And then if it follows through into the close, it can be rolled into a higher time frame. Again, not trading advice, just trying to give educational things of ways you can look at, especially with momentum bars, because momentum bars are one of the easier things to play in the market. All right, so we do have the double. We do have the double triggering. We do have weekly cycles turning up, so we could see some more upside. Daily cycles are getting to the top area, but remember, the level to invalidate the double now is back at 4,400 on a closing basis. So that's a long way off until the stop is raised. So even with pullbacks, you could pull back into the channel. You could pull back. Looks like they're going to get the first cross rotation zone. But what are we watching for? Well, this could easily take us back to the recent high area. And there's still technically a gap left behind from the beginning of August. So in the short term, it's coming into a pretty key. I have some rough channel lines drawn on here. from more so the 4-hour. You can see it here on the 4-hour. But really, I'm looking at, if we do pop up, we're into a pretty key resistance area from still the beginning of August. And we have the 62.5 at 45.28 roughly. We get a close above there, then we'll also have the 87.5 rule kicking in and the double. So is there any, remember, there are no guarantees. You still have to manage stops, manage position sizing, because even because you get two patterns triggering does not make them additive, does not make them cumulative. They each have independent probabilities, and they could both be wrong. Just want to point that out, especially to newer people. But they have decent probabilities. So that's what I'm watching on the shorter term basis. First, 45.27. The stop raise for the double comes in at 45.39, and that just has to touch that area. And then that does technically raise the stop. And then we'd have higher in levels to invalidate the pattern. The next key, we have a cluster at the 75% and the second target of the double and the harmonics. Roughly came in at 45.63, 45.64, 45.65 area. Then we have 45.92.50 to 45.99. The 87.5 rules at 45.99. And you technically have a gap left to 46.01.25. So we could see some upwards prices. Now, if it got up here, especially above the 75 level, it would be in another double top territory. So that would mean this low from the middle of August, Friday, August the 18th, would be a very key. Getting a little ahead of myself, but in case you can't tune in, if we do get above this 45.63.50, this low from the 18th of August becomes very important. NASDAQ confirmed but did not trigger technically. It's confirmed because it traded above the high, but it did not trigger because it's not closed above the high. So the levels right here on any pullback here, I'm watching about 15.335. This is a very steep, sloppy channel. We can put channel lines on here roughly for a target area. If we push up into the open, I'm watching this 62.5, 15.517, 575, so 15.518. That's important on a closing basis, but intraday, that's going to be a key level if it does push up there. On the little, it looks like going into the open, you might have a little mini double top. So do keep that in mind. Let's just double check on the S&P, and on the S&P also, we do have a little mini double top. So just because you have it, we could rally into the open and completely invalidate. I'd be using conservative targets on this though right now since we've triggered a bigger pattern, but that could be a pullback, you know, potentially 44.87, 44.83, 44.78 are the three levels. If we look at here, that just takes it back to the prior breakout zone right here, to the trigger point for the double, and into the 4-hour rotation zone. So that's how. That would be, you know, that triggers, hey, you get a pullback before the next rotation up. So therefore, that's the way we do the analysis. All right, who else is here? Morning, John. Yep, there you go, Jacob. Potential hourly double top could provide good risk reward on ES. Yeah, that could be a pullback. Now remember, you don't have to short something like this, but let's say you aren't long yet and you want to get long because you're going to play the higher time frame bullish pattern. That could be used for pullback levels because that could get you better risk to reward, as Jacob pointed out. So the whole point to this is learning to do some analysis, which a number of people have learned to do, and then you have your own trading strategies depending on your time frame and your plans, and you learn to develop these kind of tools to help you become a better analyst and a better trader. Would you please do, Lily? If I can get to it timing wise, we will. There was no double in the Dow, but it is going into clear path move. So this is one of the key pullback level you see. Watch the rising 4-hour rotations, and there's a little mini double top here right now too also, but the key pullback level is about 34,730. Looks still like that's valid. And that would just be a little, see, that even is ahead of that pullback level. And that could be invalidated on a push up in the open without ever triggering. Now, the next major level I'm watching, let me flip this around. Since we came back down to the 50 to 62.5, and we've reversed back up, I'm going to flip these in the short term. Flip these in the short term and look where the 62.5 and the breakdown level are. So 35,175 is key for closing on the Dow. The Russell did trigger and also hit, not quite yet, very close, but not quite to the stop reduction. The pullback levels on the little Russell, which does not have a little mini double top, but the key pullback level at this point, you see the prior resistance shelf becoming support with the 4-hour rotation zone. So roughly about 1883 is the key support point. 1906.7, 1918, 1929.6 are the key levels to the upside. All right, VIX dropping below that 1480, closing below there yesterday. Still a gap left behind in the VIX. So this could continue to pull back more, which would bolster the bullish case. Again, 1480 is key resistance. So even if this pops up with a minor market pullback, I'm going to be watching 1480 and then 15. The DAX also triggered the mini double bottom pattern, a pullback. You know, based off some economic releases in Germany this morning and rotating back up. So you see here, pull back into the 4-hour rotation zone and let me do this. And remember, use candle bodies more so than the wicks. All right, so into the rotation zone, candle body, support level area, and rotating back up. So we should see that. Just watch in the short term if this does form a minor double top and then it triggers. It's not yet in double top territory, so that's not in play yet. Notes, triggered the double, hit the stop reduction already. So we could easily see a little more follow through. I'm really focused on this 110.28 level. But that was, you can see the momentum yesterday. Little pullback, and then some more momentum with the releases, with the GDP releases this morning. Nearly coming to the second target. So that's where that stands. The yields did not ever get into double top territory. Watching for the yield pullback. Remember, we got weekly cycles rolling over, and the key support area, once we start breaking down below about 4.07, is 3.94, 3.95. Okay. You can see here on the weekly rotation zone. So the 10-2s still caught in the higher end of consolidation. Dollar index also, let's look at the bigger picture first. Rolling over on the weekly, so we could have sideways to down for at least a couple weeks. So far, we're technically an inside week to last week, unless we break below last week's low. And we're pulling back to the support of the 200 and rotation zone and the prior channel. If we do break below that, I'm going to be focused on 102.21 to about 102.31 for a further pullback level, because daily cycles aren't yet at the bottom. And we did get very, very close to overbought conditions. So if it's going to make a move higher, it's got to pull back, get a little more momentum back, and then move back up once we get cycles to the bottom. Crude. I pulled off the levels for the sloppy head and shoulders. It's in potential reversal territory right now, but if we get a close above 82.15, I will be watching for the retest of the most recent high area from August. Catching on the 50. Overall, crude still has some downward pressure from the weekly, and it's getting to the topping area on the daily. That's why I'm really focused on this 82.15 area for right now. Natty gas, not much news that we talked about yesterday. Gold, 62.5 level, which we've tapped on today, this 1974.4, close above that. It shifts the probabilities for continued follow through. Remember, I was talking, we're watching for the bottoming pattern to come in, and this would be more of a confirmation that at least we're in a bigger channel with the major support being down here. And then we get to breaking above the highs from the end of July. The next major target, well, the next minor target is 2016 on a closing basis, and the next major target would be 2062, besides using the shorter term harmonics. Silver, and remember, it closed above the 62.5 back on the 23rd of August, finished the 87.5 today. So based off of this, we're going to roll it into the bigger retracement levels. And the next target is 25.9. Key pullback levels now. The key pullback area, let's see, is your significant level right around there at about 24.95, virtually where the low was today. If it did pull back a little, you have a gap left behind, and then the next pullback level is until 24.45. So I'm watching for follow through from the metals. 10-year JGBs, not much of a change. The yen pulled back yesterday from the minor harmonic level, but only going to start watching for a more significant pullback if we get a close below 144.85. Euro putting in a little mini double, which is done by now. I'm going to, so it held the 200 area. Let me pull off some of these things. Get the cleaner levels up here. We're going to flip this around in the short term to see. So 109.60 roughly, and then 110.28 in the short term levels. Pound, also watching for a continued little rally, but then a rollover play in the pound. Bitcoin, we had the little mini double, never pulled back enough to invalidate it, and with the grayscale ETF ruling by the appeal court saying the SEC didn't do enough to shut it, like to say it couldn't go forward. So that's back in play. That's rallied but pausing. I don't think this is bullish. I mean, it completed the little bullish pattern, but I don't think longer term this is bullish. I'll just be watching for another corrective play in the short term. What else do we have? Spiders. Spiders also triggering the double. 450.33. And remember, on a closing basis, it did not close above the 62.5. Tapped it yesterday, but did not close above 449.53. That's what I'm still watching for, that closing basis today. 450.33, first target of the double. Cluster at 452.80 area. And then 455.44 to 456.14. Major support all the way back at 444.70 roughly. The minor support, I would be watching about the 1 hour rotation zone on the pullbacks here. And that would be about 447, about 447 to about 447.50. So that's what, but we should still, you see the 3-week pullback. This is on the weekly into the rotation zone, breaking above the pausing week last week and now moving up above, triggering that double. So Keep an eye for more upside in the spiders. Same comments as before. No guarantees, but the probabilities have shifted. From the Qs, the key support level, the Qs did trigger the double. Whereas the futures did not, the Qs did. 372.64 is the key pullback level on that. And then below that, your key support level is right around about 370.25. The targets for the Qs, you can see it right here. The key target area is you got a cluster 379.60, 383.36 to 383.82, and then 386.90. I'd be really focused on the first and second targets, and there is still a gap left behind in the middle here. So pay attention to those levels. Real quick, Tesla. Remember, we were looking above 245 to 255.83. It's now back in anywhere between 255.83 to 266.69 and in a potential rollover zone. The only thing that makes me continue on the short-term bullish case would be a close above 266.69. Anywhere in here, I'll be looking for a potential topping play. Again, there is not one yet from my perspective. But daily cycles getting back to the top. Weeklies could still run a bit more higher, but really at least watching for some pause up in here. NVIDIA powering up in the short term again after catching on the rotation zone. This technically is a double. It could get invalidated today or tomorrow with a higher push, but that just means the key low from Monday the 28th is the low to watch as long as this double's in play. And that would only be to a pullback to the prior support from mid-August. We have got the request for Lily. Lily with the waning momentum up here. Let's see what the long-term levels are at this point. The super long-term levels. Right around... So if you're trying to do something super long-term, really your key support in the short term I'd be watching is right around 534. Other than that, next target for at least a stop raise for a long term would be around 571. The weeklies, you're getting into weekly cycle topping areas, but not rolling over yet. So I'd be watching for that because depending on your time frame, it would be more aggressive trailing stop. And the bigger key area overall is this 500. 500 to 505 for a long-term level is very, very key. Where do we sit? Good morning, Sterling. Hurricane's hitting way north of Bob. So he got storm stuff and some rains and winds, but nothing. It's way north of Bob. Remember, Bob's in Naples. Thoughts on Etsy? You have a little very mini triggered double, but that's, you know, a very mini trigger. That's about it. Overall, you're trading against the 4-hour rotation zone, the daily rotation zone, and the weekly. You're back in a key support area. If it starts building a stronger pattern and can base down here, then I'd be much more interested. I'd have it have to prove itself. This is a very minor pattern. Usually doesn't even get to the other side of the rotations on this area. I'd really start taking notice if it can get a close above 81.05 again. Other than that, just want to check something. See, it's still, I mean, this, I really doubt it would ever trigger this huge weekly double, but You know, it is something to watch longer term. And I think if it breaks below, if it can't hold here and rotates back down and breaks below 67, I would not want to be along it at all. And still, look how close it got to the 87.5. It did not invalidate that rule either. So we should still see. I would not be overly aggressive on Etsy at this point. We could still see it return below 64, 67. So anything would be an aggressive, any bullish play would be very aggressive unless it can prove itself out. You are welcome, Richard. Why use bodies, not wicks? Yes, it's tested out. Remember, in the order of importance, closing bars, especially on higher time frame, the closes are the most important. Closes are most important statistically. And therefore, what are one side of the candle body's closes? Key opens are also important. Because how do you get things, again, not markets that trade 24 hours, although it is interesting because you get a baseline opens when it resets every day. But opens are the second most important, followed by highs and lows. Now, major swing highs and lows will trump opens, but those are major. Daily highs and lows do not. So, candle bodies, what are they? What forms the candle bodies? The opens and closes. And if you find repeated opens and closes around a key level that are reinforced by highs or lows, that's the best way to look for it. Train your eyes to gravitate to candle bodies, and then it can be reinforced by highs and lows, and that's what makes it more significant. There's too many people that start gravitating every wick, and you're better to start looking for the bodies that then have wicks aligned with them. If you can learn to do that, you're going to be a lot better. Is the triggered daily double bottom in TTWO still value? TTWO. And then I have to run it is in the open. The triggered double bottom. You mean, hold on, this one, this double. Well, then I have to take off into the open. This was a tough, so it hit the first stop based off of this side, 139.67. 139.66. No, technically it is not still valid. It is not by 1 penny. So hit the stop reduction. You have to raise the level that invalidates it, and it is technically invalidated. All right. You're welcome, Anissa. You're welcome, Richard. I shall talk to everyone later. Hope you have a wonderful, wonderful day, and I will see everybody for PCE and Unemployment Thursday tomorrow. Bye for now.